The market leaves a clue before every big move. And if you are able to understand the origin of that move, you will be able to predict its destination with higher confidence. In this video, I am going to break down 7 powerful price action strategies that no one is telling you about. Watch this video till the end. Pay special attention to number 6 and number 7. That is where most traders either win big or blow accounts. Watching this video once will not be enough. You need to watch it like twice or 3 times. Pay attention to details. This will definitely change the way you see charts forever. This is Finspoke channel. If you are coming across this channel for the first time, do well to subscribe and give this video a like. Leave a comment below. And if you have been watching or following, you have not subscribed, kindly support the growth of this channel by subscribing. Let's get into it.
Chart patterns are recognizable shapes or formation that appears on a price chart, indicating potential future price movements, and used by traders to predict trend continuation or reversal without relying solely on technical indicators. Like I said before, indicators are lagging. That is why price action is the real deal. The psychology behind chart pattern as a price action tool is this. We use the chart pattern to identify when a trend comes to an end or if a trend is continuing in the direction. For instance, in a moving up trend like this, the pattern to form can be categorized into these things. Is either it forms a triangle pattern which comprises of ascending triangle, descending triangle, or symmetrical triangle. Or it could form channels in form of horizontal channels, ascending channels, descending channels. It can form wedge, rising wedge, falling wedge, or it can form a reversal pattern that has to do with the common top, triple top, double bottom, triple bottom, double top, triple top that we commonly see almost on daily basis. These are the patterns that could form in the market. Let me remind you that chart patterns are consolidation phase of the market. They always occur when the market is trying to take decisions. And what it means is that whichever side that favors more is where the price will break out to. It's always a period of consolidation, a period of indecision between the buyers and the sellers. So whichever side that wins the argument, price breaks towards that side or that direction. Now what we are seeing here is a triangle chart pattern that is being formed here. And in this case, it's trend continuation. The break shows a continuation in the trend as displayed here. In some cases, you could also see something like a break and a retest before the continuation. But just get the message. After this phase of this consolidation, the buyers win the argument. So the trend continued. So if you are to trade this chart pattern, you wait for the break of the trend before you place a trade. Next is a market structure and the key levels. Now, key levels are best when you spot them at the higher time frame, coming from monthly time frame, weekly time frame, daily time frame, down to 4 hours time frame. When you spot them, you can mark them with different colors to identify them, because it carries also an informations that will help you in your trading journey. Now, these key levels, I say they are the bus stop of price in a chart. For instance, we have the resistance key levels and the support key levels. This is a support key levels and this is a resistance key levels. Now, these are areas where price is being rejected. Multiple times we say that they are area above price. That is why price, when the price touch there, it will push back. For the resistance, the price reversed drastically downwards from this point of resistance. And for the support, the price reversed to the upside. So these are the scenario. Now, from the price action, the psychology behind these levels is that when price comes up here to this area, because it's recently respected in this chart, when the price came to this level, it is deemed expensive, so the buyers couldn't continue. It makes them less interested, so you see momentum coming down, the sentiment start dropping. That is why it triggers a kind of reversal. Now, the reverse, which is the support level, this area at this moment is below price, and that is why the price will touch it and be pushed up. In fact, at this level, the price is very cheap. While this resistance level presents a short opportunities, the support levels present a buy opportunity. So the opportunity is being presented here. If it returns back again, you enter a buy. The same way opportunity is presented here. If the price returns back to this place, you enter the trade. But this is not enough. Get the information. So the psychology behind the support level means that the price came down at this area that is recently respected within that moment, but that price is too cheap that it couldn't go below it, so the price has to push up. So if you want to trade this, you spot the opportunity at the support level, you wait for the price to come down again before you can place a buy opportunity. Next is a higher time frame key levels and the confluence. When you come to your chart and you are using monthly time frame, weekly time frame, daily time frame, or intraday time frame, the lower time frame aren't visible. As a trader, what you need to do is to mark your monthly time frame, weekly time frame, and daily time frame with different colors. Now, these time frames that are visible, they are the obvious key level or the major key levels. This monthly time frame, weekly time frame, like in this case, I use gold to mark monthly time frame, blue to mark weekly time frame, and the white for daily time frame. Now, when you see this monthly time frame, weekly time frame, They are what we call major key levels. Now, when you look at this monthly time frame, you discover that price still have enough space or enough time to get to the next resistance zone. When you have this idea in your mind psychologically, you'll be able to know how to enter trade at the lower time frame. Getting to the weekly time frame, you can see the weekly time frame marked with blue. Let me zoom out. You can see the price recently crossed the weekly time frame, came back to retest it before pushing up. So between here and here is still enough time. If you are entering a long trade, you still will make something from the place where the price is till it gets to the next resistance, major resistance key level, which is this monthly time frame. Now this is the daily time frame. Remember that what I am marking here is just the obvious key level where price reacted. This is daily time frame. We try to extend. There was a time that price is dangling around the daily time frame. Okay, so having clear knowledge of there is a major key level in front, which is the weekly time frame and the daily time frame, will also help you. You always consider the time that you have between a major time frame and a minor time frame. So this presents an opportunity for you to know what to do per time, especially when the price gets to a resistance level or a support level, as the case may be. Now we come to the 4-hour chart. These are obvious key levels too, where price reacted. You can see. So even if you go down to the 1 hour 1 hour chart, 30 minutes, you will still see key levels. But the major key levels is the one that you found in monthly time frame, weekly time frame, and the daily time frame. So because these time frames are low or slower to form, that is where the institutions, the big buyers, they mostly look at these major key levels to pitch their positions. When you label them, once the price is approaching a certain level you had previously labeled, by having this knowledge, you will be reminded that this will be a high quality long trade or a high quality short trade setup. Now, the time frame confluence, what this means is that at least 3 time zones that you are trading with should align. Let's take, for instance, this is a 4-hour time frame. As an intraday trader, you want to look for an opportunity. So you spotted a buy opportunity here. You go to 1 hour time frame. You also see that buy opportunity. That's time frame alignment now. You go to 15 minutes time frame. You still see that buy opportunity. The time frame that you are trading, that's the confluence I'm talking about. At least 3 time frame must align. Is a confirmation. They must align. If they don't align, what I mean by alignment, if they don't agree, then something is missing. So that's the time frame conflicts. Remember that the time frame that you choose to work with is what will make your trades either to speed up or to be slow. Now, the edge you have for having your confluence in agreement, your time frame confluence in agreement, is that it helps you to be hyper accurate. That's the psychology. If the daily is confirming what the 4 hours and the 1 hour is doing, if the weekly is confirming what the daily and the 4 hours is doing, in summary, let the at least 3 time frame that you are working on, let them be in alignment. Next, long wick candlestick. Wicks carries a lot of information and needs to be paid attention to. Looking at this trade, you see that the trade is an uptrend. Broke structure here, move up, broke structure here, keep moving, break structure here, keep moving. So is actually trending up. But as a trader, we are always faced with this challenge of how do we know if price, when it gets to this key level, is it going to break this key level and continue rallying up, or is it going to reverse at this key level? This is always a challenge that we are always faced with. So what you need to do is you look out for candlesticks with long wick, just as you can see here. This is a candlestick with a long wick. What this wicks is telling you here is that they are area of rejections. So price is being rejected in this area. So what this implies, this week's implies that the buyers could no longer push the price up. They couldn't push the price above this level. They couldn't push through. Then the price now swing down. They tried to push it again from here, but they could not. And you now saw this big momentum candle showing that the momentum, the sentiment has shifted from the buyers to the sellers, and the price couldn't move up again. Had it been that the buyers were able to push across this level, you would have seen a momentum candle like this, closing above, cross this place, and they close above this level. This long wick candle shows reaction to this present level. It presents a short trade opportunity or a sell opportunity. At this retest, you take a sell trade or a short opportunity. In opposite, if found here, just like in this case, it presented you with a buy opportunity. As you can see that price reacted here, and the next it took off, came for a test, and they pushed up to the next resistance level. Now, from the price action psychology, at this point, sellers could no longer push price down. When you are approaching a zone, price is approaching a zone. Look out for a candlestick that reacted at that zone to either see if the price is presenting you with a long opportunity or a short opportunity, or if price will break through. If there's no reaction at that level, then know that the chances of price breaking that level to continue in its original direction is always there. So you wait to see what happens next. There was actually a trade I took last week using this strategy. Let me show you this long week. So I actually know I spotted it at the support level, just like this. So I actually know that this is presenting me with a buy opportunity. So what did I do? I had to execute the trade. Okay, look at it. This is the trade. I spotted this week here. I didn't take this trade at 1 hour time frame. I took it at 15 minutes time frame. So when I spotted this, already I know that price was actually dangling within this zone. Okay, so I was actually expectant. So when I saw this, there was a rejection. Saw this long week. I quickly switched over to the 15 minutes time frame. That was where I took this trade at 15 minutes time frame. This is where I took the trade. So that day I was up and down. So I wasn't steady. If I had been steady, I would have managed this trade. When I saw this, I would have entered another one. I would have opened another position, knowing fully well that I am actually on the win side. So most times when you get a good trade like this, you have to seriously manage it. So I took a trade, this particular trade, using this strategy of long wick candlestick. Mind you that there are other conferences to support this. Not good at indicators because they are lagging. But with price action, you are good to go. Next is inside bar confirmation. Now, this is a powerful price action signal that represents consolidation or indecision and a kind of build up before a reversal or continuation of that trend. Let me explain. Price break and close above resistance level, indicating that buyers have taken control and the market can continue pushing upwards. How do you know that the buyers will continue or the price will continue pushing upward? For instance, there was a resistance here and a pullback. The price pulled back, pushed up a bit, and started pushing down. In an uptrend or in a situation like this, and you see something like this, how do you know or how do you ensure that this is not a fake out? And that is where this tool or this candle, the inside bar, comes to play. The inside bar candle consists of two candlesticks. The big candlestick and the small candlestick in front of it. Now this big candle is the mother candle and the small one is the child. For bullish, you see a bullish candlestick with this small red candlestick. And for bearish, you see something like this. Now, I want you to understand that this is a period of indecision, a period of consolidation, a period in which something is being built up. So the market is actually telling you, wait, that's the psychology behind this price action too. Let's see it in a chart. Okay, looking at this is an inside bar candle. Now, actually, this bullish candle closed above this resistance zone. You are faced with, will price continue to push up or will price reverse at this stage? So this inside bar is telling you to wait. I want to decide. And in this case, it decided to push up. You can take the trade at the close of this mother candle. You can also take this trade at the break of market structure. And you can also take the trade at a retest. And this is a kind of trade that you manage. Because if you look at this is daily, each of these candlesticks represent daily activities, showing that it is bullish. I hope you gain value. Go to the comment section. Tell us the topic that you want us to cover in our next video. Is it on trading, forex, crypto, stock? Or you want us to cover topics that has to do with investment and money mindset? Don't forget to like this video and share it. That's the only thing I asked from you to support this channel for growth. Next strategy, combining high quality signals to get a high probability setup. The best trading setups are the ones where multiple high quality signals confirms each other, providing a robust and reliable indication of the market direction or potential price movement. Let me explain. The best quality trade or setup that you could have are the ones where you have a lot of high quality trades in them. This is because the higher the quality, the higher the probability of that trade going in your favor and moving a greater distance. So you can make a good profit. A trade with a combination of setups like, okay, let me just show you my recent trade in this particular pair. This is a recent trade I took in this pair. We are looking at high quality signals combined together to form a quality setup. What actually happened here? I will list the threats in this particular trade that made it a high probability trade when put together. In this particular trade, there is a chart pattern in form of double bottom. I mean these trades. I'll move down to the lower time frame where you see it clearly. There is a pin bar as one of the strategies I discussed here. There is a trend line confirmation. Now, this trade, I picked it at the key level. The candlesticks from the bearish side were becoming small, meaning loss of momentum. So the candlestick started shrinking. There's a long wick as well. All of these threats I mentioned, they are embedded here. And I have talked about all of them in this price action strategy. This is 4 hours time frame. Let's get to 1 hour time frame so we can see this trade clearly. This is a 1 hour time frame. I saw that opportunity in 4 hours time frame. I decided to move down to the 1 hour time frame. I actually took this trade in 5 minutes time frame because I have to do what we call refinement. So if you zoom this, first, this is the long wick here. Now the wick here signifies that sellers could no longer push price down. I entered this trade at this 5 minutes time frame. The reason I had to do refinement before entering that trade is, this trade is, one, to reduce my stop loss. Secondly, not to set a limit order that probably because of trade, the trade will not trigger. Third, to observe at the lower time frame what is actually going on. As you can see, I entered this trade on a retest. there has been a consolidation and the candlestick shrinking here at this 5 minute level. The candlestick keep shrinking, meaning that momentum, the bears are losing momentum. So it consolidated for some time before it actually peaked. So this is one of the things patients will do for you in this industry. I took this trade purely on price action strategy, no indicator involved. Indicators are lagging, but if you can study this, master it, backtest it, first try it with your demo before applying it in your real chart. That will be beautiful for you. Next, look left or look at where price is coming from. Listen, don't just react to what you see on the screen right now. Zoom out and ask yourself, where is price coming from? Did it just rally from a strong demand zone, or is it dropping from an untested supply zone? Ask yourself questions. Where is this price coming from? Every move that you see in the chart has a story. And when you understand the origin of the move, you can predict the destination with higher confidence. So from price action perspective, this strategy is a technique that allows you to see the bigger picture and to see where price and momentum is truly headed. If you understand where it is coming from, you will be able to know where it is headed. Now look at this. You notice this long wick here. That's a sign of rejection. This price that is running up, that's a sign of rejection. Once I spot this, I know that this price will not go far before it will reverse. And that was exactly what played out here. This is actually a resistance zone. So price first rallied up and came here to give you a long wick. This is an untapped supply zone. So it pushed up and the buyers couldn't push price further than this. The next is for price to start dropping. So if you actually look at where the price is coming from, automatically you will understand with this week, it is no longer presenting you with further buy opportunity. It is telling you that it's done buying. That is the essence of looking left or looking at where price is coming from. So when you look at this, you discover that the moment this untapped supply zone was created, the momentum shifted. This is a long bearish candle. So the momentum shifted and the candlestick from the bullish side started shrinking. The buyer started losing momentum. This is a strong signal. This price reversal presented a very nice short opportunity down to this place. So in summary, if you look left where price is coming from, you would know exactly where the price is headed, and that will give you an edge in your setup.
Every great entry in the market deserves a great exit. Exit your trade as structures, not emotions. And if you are struggling with your trading career, I run a coaching session where I will hold you by your hand, step by step, to teach you, guide you by myself how you can start making money in this industry. The chart is a battlefield, and your strategy is your armor. Master these 7 strategies, and your trading career will change forever. Don't watch this video just once and go and sleep. watch and rewatch. Backtest every strategy that you've seen in this video with your demo first. Then apply it in your real life account. I want to see your testimony in the comment section. Till I come your way next time.